Now, one of the offerings on Rand Merchant Bank's menu is South Africa's first US Treasury bond custodial certificates. This investment listed on the JSE is suitable for both businesses and individuals. To unpack what this is and its investment case, I'm joined by senior commodities trader at RMB, Raymond Philips. Thank you so much for your time, Ray. I mean, I was intrigued by this because I was doing Stockwatch. I was hosting Stockwatch the other day, and a viewer said that we should unpack this dollar custodial certificate. And actually, to my surprise, the analysts that I was with were not aware of it. So I decided, you know what, let me actually just unpack this with, the providers of this DCC. What exactly is this, a dollar custodial certificate?
Sure. So, I mean, back in 2017, RMB launched this instrument, the dollar custodial certificate. It essentially gives investors an exposure to US Treasury bonds. So, in other words, getting involved with the exciting world of US interest rates. At the outset, there were two essentially ETFs that were launched, a 2-year and a 10-year Treasury bond. Exposure. Those are now effectively a 1.5-year and a 2.5-year exposure, but they still have a pretty good, insights or exposure into these US Treasury bonds. How it works is RMB essentially purchases the backing underlying US Treasury bonds when issuing these DCCs. That then conveys an ownership on the capital portion of the US Treasury bond to the holder of the DCC, and an indirect, benefits to the income, in other words, the coupons on these US Treasury bonds through RMB.
So actually, is there a difference between, the exposure that you get through these DCCs versus actually a direct exposure to the US Treasury bonds? Does this make it easier for South Africans?
Yes, it does make it easier for South Africans. I mean, it is listed on the JSE. It's pretty transparent. You'll see it there, a bid and offer on screen during the course of the day. It also has added benefits in the sense that you still get direct exposure to the US government, if you like. Most traditional ETFs, there's a inherent credit exposure to the issuer of the ETF, whereas in this case, the holder of the DCC has a direct exposure through to the US government.
What are the drivers of returns for people who are actually interested here?
Well, there are two primary drivers. The main one has to be the dollar-rand exchange rate, which of course is very topical at the moment with everything going on locally as well as internationally. But the second one, I'd say equally as important, is exposure to US interest rates. Of course, that's also very topical at the moment. We're all sitting with bated breath, waiting for these US rates to come a little bit lower. I think most guys are expecting that in the latter half of this year, but it still remains to be seen.
So you're saying that you get returns, the perfect conditions for returns are lower interest rates, but also a higher dollar.
Exactly. So yes, there is a bit of interplay there. But I think with most of the sort of commentary we have around US interest rates at the moment, the feeling is that they will come lower. So perhaps it might be a good time to actually get active in products such as these.
All right. Well, I mean, you do mention that it is suitable for both companies and individuals. And I mean, retail investors, there's a lot that we don't know in terms of, the different areas, different factors, of an investment, the conditions. What do retail investors actually need to know or keep in mind, maybe focusing on, tax implications and, fees and all of that?
Yes, well, I mean, the interest earned on these custodial certificates, because as we know, US Treasury bonds typically pay semi-annually. So you will then receive that coupon in the form of rands. That coupon, essentially, that you receive will be liable for income tax. You're not going to be subject to security transfer tax on these. So yeah, I think that is, from a tax perspective, that's definitely something to keep in mind. I think another advantage for your retail investor is that these dollar custodial certificates do not consume your offshore allowance. So if perhaps the investor wants to take a view on where US interest rates are going, or perhaps protect themselves in terms of currency implications, they also might be a good product to invest in.
All right. Well, thank you so much for that. We definitely needed that. Really, really grateful for those insights, Ray. That was Senior Commodities Trader at RMB, Raymond Philips.